Hi, my name is Jeff Tucker. I'm the principal economist at Windermere Real Estate, and these are the numbers to know right now. The first number this week, 970,000. That's the annualized pace of new single-family construction started in October, according to the latest new residential construction survey released Tuesday, November 19th. It's a big step down from September's revised pace of 1,042,000 and generally lower than forecasters were expecting. As you can see here, back in 2021, builders were running at a pace well above 1 million annualized starts, back before interest rates climbed and dampened their enthusiasm in 2022. However, when you dig into the regional details of the new construction report, we see that here in the Western census region, single-family starts actually climbed about 5% to 229,000 annualized new homes. So the headline decline was driven by a drop in the South, which usually accounts for almost half of new construction, as well as the smallest, noisiest region, the Northeast. So the next number to know this week is 326,000. That's the annualized pace of new multifamily apartment construction started in October, from that same new residential construction report by the census. It's a bit noisier than the single-family survey, and this month did represent a step upward from September's revised pace, but it still leaves apartment construction on the low side, relatively depressed after the boom that peaked in 2022. In fact, it's still lower than in most months just prior to the pandemic. Now, the census doesn't release regional breakdowns for these big apartment building starts, but if we back them out from the difference between total starts and single family, we can once again see that the West had a big jump in starts for homes in any building with 2 or more units, actually from 60,000 to 109,000 at an annualized rate. Now, this is a noisy data series and we shouldn't read too much into 1 month's data, but it's still an encouraging sign of strength for builders here in the West. So, speaking of builders, the next number to know right now is 46. That's the preliminary November reading for the Housing Market Index published by Wells Fargo and the National Association of Home Builders. The index is constructed so that any number above 50 means a majority of builders feel confident about current and near future conditions. November's score of 46 is the closest we've come to that threshold of more people feeling confident rather than less since April of this year. In their press release, the president of the Builders Association pointed to growing confidence about regulatory relief under the new administration in the year ahead, while their chief economist cautioned that high interest rates and potentially rising tariffs could darken the industry's outlook next year. Nonetheless, on balance, builders are starting to feel a little better about their prospects. Historically, high builder confidence, as measured by the survey, has gone hand in hand with more housing starts. But in the last couple years, that relationship has broken down. In fact, right now we're still seeing a lot more single-family construction than this middling level of builder confidence would lead us to expect. I think the simplest explanation for this divergence is that the Housing Market Index survey is sent to a broad sample of home builders, which intrinsically means it tends to overweight the outlook of smaller home builders relative to their share of the new homes actually getting built. In the last couple of years, the strong financial position of the biggest publicly traded home builders has helped them thrive even after interest rates climbed, in part by offering interest rate buydowns for their customers. So speaking of interest rates, that brings me to the last couple numbers to know right now, 7.08% or 6.78%. Those are the two most recent readings for where 30-year mortgage rates stand. First, according to Mortgage News Daily, as of Monday, November 18th, or secondly, according to Freddie Mac's primary mortgage market survey, as of Thursday, November 14th. Those daily readings from Mortgage News Daily have been unusually volatile in the last 2 weeks since the election, and I'm also opting to show them alongside Freddie Mac's popular weekly survey in part because the two sources have diverged a bit more than usual in the last couple months. It's also a good reminder that there isn't one single source of truth on mortgage rates, and in practice, everyone's rate will depend on their particular circumstances, the house they're buying or refinancing, and their lender. Still, the big takeaway I see here is that rates are up sharply from their lows in mid-September, but hopefully they might be starting to stabilize after climbing for those last 2 months. And they're still somewhat below the highs they reached back in May of this year, or certainly October of last year. All right, that is all for this week. Thank you for watching, and don't forget to subscribe.